That'll look at our top stories. Time now for the business news with Stephen Carroll, starting with a meeting with Renault-Nissan and Mitsubishi's Alliance as its chief, Carlos Ghosn, remains in custody in Japan.
That's right. It's the first time we've had a meeting of the Alliance since Carlos Ghosn was arrested on suspicion of financial misconduct. The partnership has come under pressure as both Nissan and Mitsubishi have removed him as their chairman. Now, Nissan's chief executive, Hiroto Saikawa, and Renault's deputy CEO, Thierry Bolloré, will take part in the meeting, both by video conference. Now, Bolloré has taken over Carlos Ghosn's function as head of the Alliance while he's detained in Japan. We're not expecting any decisions to be taken at this meeting, but there may be tensions as we know that Mr. Saikawa isn't happy with the balance of power among the car makers, where Renault has a much greater say over how Nissan is run than vice versa. Mr. Saikawa is said to have told Nissan staff that he wants the Japanese firm to be given more weight in relations with Renault. Well, staying with the auto industry, the US president says that General Motors' decision to cut thousands of jobs has led him to reconsider tariffs on imported cars. In a tweet, he said that GM wouldn't be closing factories if it hadn't been for imported vehicles. On top of that, the US trade representative says he's looking at new measures to impose on Chinese cars being imported into the US. These moves coming just ahead of the G20 meeting. They're bound to raise tensions with some of America's trading partners, as Selena Sykes now reports.
Imposing tariffs on car imports to the US. The threat by Donald Trump that's been simmering all year, and that has now resurfaced ahead of the G20 summit, as Washington accused Beijing of unfairly overtaxing US car imports. At 40%, China's tariffs on US vehicles are more than double the rate it imposes on other trading partners, and are much higher than US tariffs on Chinese vehicles.
China's policies are especially egregious with respect to automobile tariffs. At the president's direction, I'll examine all available tools to equalize the tariffs applied to automobiles.
After General Motors' announcement of nearly 15,000 job cuts on Monday, the US president said the car maker would not be closing their plants if tariffs had been placed on imports. His statement is likely to raise alarm bells for the EU, which exported nearly $43 billion worth of vehicles in 2017, and Germany in particular, which made up nearly half of the bloc's exports to the US, as well as Japan, which traded nearly $40 billion worth of vehicles with the US last year. The prospect of US auto tariffs is likely to hang over the G20 summit, with the IMF warning that potential taxes could cut 0.5% off global growth.
America's central bank chief has hinted that it may slow down the pace of interest rate rises. Federal Reserve Chief Jerome Powell said while borrowing costs were still historically low in the United States, rates were just below a neutral level. The Fed has come in for sharp criticism from Donald Trump for raising rates, despite the Fed's position being supported by many economists. Let's hear what Jay Powell had to say.
We therefore began to raise our policy rate gradually toward levels that are more normal in a healthy economy. Interest rates are still low by historical standards, and they remain just below the range of estimates of that level that would be neutral for the economy, that is, neither speeding up nor slowing down growth.
Well, that news gave Wall Street a major boost on Wednesday. A positive open today on the European markets as well. Car makers seeing somewhat of a rebound on the markets. They had sharp falls yesterday on fears of those US tariffs. Clean sweep of growth across the board. Paris' CAC 40 up by nearly 1% there. In Asia earlier, more mixed picture. Some boost from the Fed comments, notably on the Nikkei in Tokyo. But we did see falls on the Hang Seng in Hong Kong in trading. On the currency markets, the euro trading for almost $1.14 and just under 89 pence sterling. Next, the Anglo-Dutch consumer group Unilever has announced that its longtime CEO, Paul Polman, will retire next year. This comes after shareholders rejected a push led by Mr. Polman to scrap its dual headquarters system and base itself completely in the Netherlands. Alan Jope will take over as CEO of Unilever, a company that owns brands including Dove soap, Magnum ice creams and Hellmann's mayonnaise. Well, finally from me, French companies are leading the way in Europe for gender diversity on their boards. The largest public companies in France have an average of 44% female board membership. Two of them, the luxury group Kering and the hospitality firm Sodexo, have a majority of women as directors. All this according to research from the group European Women on Boards. Of the continent's 200 biggest companies, only 11 had achieved gender parity and 9 of them were French. So still a long way to go. Well,
only 11
out of 200.
Jeez. All right. Thank you very much, Stephen. Stephen Carroll with a look at the business news. He'll be back a little bit later in the day. For now,